Hello, everyone. This is Peter Towers from ESS BIZTOOLS. Peter Towers from ESS BIZTOOLS. Welcome to this webinar today, where we're going to look at an SME debtor systems manual that accountants, bookkeepers, business advisors, or chief financial officers could facilitate the introduction of, or at least a review of what is happening within your clients' businesses. If you have any questions during this webinar that you would like to put to me, please go to chat and type in your question, and I will answer it during the webinar. If you think of some questions later on, you can send me an email, peter@essbiztools.com.au. A few years ago, we had a headline in the world media, longest debtors days outstanding in the world, and that was awarded to Australia, a very dubious title to be awarded in Australia. I think it potentially caused a lot of problems for accountants and bookkeepers, chief financial officers, and business advisors, because this was an award that was given basically relating to the work being done in small and medium-sized enterprises all over Australia. So let's have a look at the aftermath of what happened. At that stage, the debtors days outstanding was 56.4 days. That was 26.4 days in addition to the normal 30-day trading. The next closest to Australia was 3 days less. So that was a disastrous result. At the time, the Australian Small Business Ombudsman, Kate Carnell, indicated that debtors was the silent killer of modern business. And she also said that 90% of small business failures are due to poor cash flow management. Obviously, right in the middle of cash flow management is debtors management. Silent killer, and 90% of small business failures are due to poor cash flow management. And then we had the article in the Antil magazine, which indicated that the current debtors days outstanding, this was last year, was still 56 days. 56 days, something like 3.5 years later. The improvement has only been 0.4 days, 0.4. The federal government claims to have sped up the payment process for SMEs after the Prime Minister intervened and instructed government departments to make sure that payments to SMEs were made within 30 days, and in some cases even faster. I think most of us would be very happy if the government made all their payments within 30 days to SMEs. And Morrison also pleaded with big business to make sure they paid SMEs within 30 days. And a number of them went public and said they were going to do that. Yet after all of that, the improvements is only being shown as 0.4 days. In the Antil magazine article, there are some other very interesting comments. It indicated that 1,200 SMEs were surveyed by Antil magazine to arrive at their 56 days, is the current figure. They also indicated that some businesses had debtors days outstanding of 134 days. Yes, you heard me correctly, 134 days. In the article also, the Scottish Pacific CEO, Peter Longham, was quoted quite extensively, and he indicated that in his opinion, remember that Scottish Pacific are a major player in the debtors financing market, debtors factoring. He indicated that for businesses with turnovers $1 to $10 million, now the real heartland of SME businesses, the debtors days outstanding was actually 66 days. 66. We'd be miles in front of the world's worst debtors management figure, with that sort of figure being disclosed. He also indicated that around 29% of the turnover of an SME business that is giving credit is tied up in debtors. That's causing a huge cash flow problem to the businesses that in the main are the key clients of small and medium-sized accountancy businesses in Australia. So thousands of firms are involved in the advice and record keeping for these SME businesses. What can we do about it? We sat down at ESS BizTools and said, well, debtors management's a very important area for SMEs, for us, but also for the accountants who we supply material for all over Australia to help you deliver outstanding advisory services to your SME clients. So we decided we had to do something about it. So we wrote an SME system. Why? Because we found that many people did not have written systems. They had hand-me-down notes, stickers on the sides of computers and filing cabinets, where the person who was currently the person in charge of debtors management in a firm had to go to try to find out what happened. I don't think that's good enough. And in 2021, it's definitely not good enough. And it's not good enough after these disastrous survey results. Please join us in trying to do something about this. Please join us in trying to help the SME community substantially reduce debtors days outstanding. This will have a significant impact on the cash flow position of small and medium-sized enterprises all over Australia. So I now want to show you the system which we have developed, which I believe will assist you to be able to bring these improved practices to account with your clients. So I'm going to go on to, so we can share with you. So you should now be able to see our members homepage on ESS BizTools. All of the material that's shown on this page is part of our gold package. Our gold or advanced subscribers receive every product package that we develop. There are 24 of them in total. But then we have sections of our material that's available in smaller product packages to assist accountants. And the debtors system manual is part of our starter package that's currently being featured in our promotion. And we'll talk a little bit about that a bit later on. So I'm going to click on the SME Debtors Systems Manual. And our system has now brought that manual material up. There is a separate video that you can watch more detailed instruction on how this product works. And there's a list of what's included. Well, I'm going to go through that with you in a bit more detail in a moment. So the first item that I want to bring up for you today is the procedure control form. And I'm just going to so you now should be able to see the procedure control form on your computer. This is a form which we've designed to guide you through the process. In fact, in each of the 24 product packages we have in ESS BizTools, we have a procedure control form as the guidance to show you what we think is the process that you should be undertaking a review of this package so that you can ensure that you've considered every aspect of the debtors management that applies to your client. Because at the end of this process, I'm going to show you our standard template for a debtors management system, and that's what you would then edit and modify if you need to suit the particular requirements of that client. They might call things a slightly different name. So you change it in the manual so that the person who's got the responsibility of being in charge of debtors in your client's business has got some basis for it, has got some information, some explanations as to why some of these things are required. And it's not only for that person, it's also for others in the sales department and administration who understand the overall system. It is rather complex, but let's try to explain it to them so that they've got a far better idea of how all of this fits together. So that's the procedure control form, which hopefully will help you have that understanding. The next one I want to show you is the debtor system checklist. So I've now brought that onto your system, and this is a checklist that should guide you through this process at the very beginning. Design of a credit application form. We're going to have a look at that in a moment. Design of a director's guarantee form. It's in the system. I'm not going to show you that today because we all know what they look like. We've got a sample there so that your clients can understand it, but they should be having that document prepared by their solicitor. Establishment of a permanent file for signed director's guarantees forms. Very important. Hopefully your client will never need to see that document again. But if in the unfortunate event in 5, 6, 7, 10 years time, there's a problem with that customer, they want to know that they've got that form so they can decide what they're going to do with it. A customer's application due diligence checklist. Welcome to new customer letter. Declining credit application if you have to do that, or your client has to do that. Some information about the personal property securities register, because that's very important in this whole debtors management equation. So that's how that system works. We're taking you through on this debtors system checklist of the various components of work that can be done, follow-up letters, means of trying to get payment to come in on time. The first thing I want to show you then is the application to open an account. Which is now on your screen. This is a form. I've seen some very amateurish attempts at getting information from new customers. In fact, the worst one I ever saw, my assistant went down to a local business and wanted to buy and just asked could we have an account, and they asked if she had one of my business cards. So she had a business card, she handed that over, and that's what we had our account opened on. I don't think that's good enough. This is a form which we've prepared, which your clients could utilize to get the information that they need from this person who's approaching them to give them credit. It's also an opportunity for that person to indicate if they require any additional information supplied to them when they receive their tax invoice. That might be a weighbridge certificate, it might be a health certificate, and also to advise if they require the tax invoices to be submitted to them by a deadline date, which might be the 4th day of the next month or whatever. Because it's then important that your client understands these processes. Because I've had situations where businesses approached me and said, I've got debtors days outstanding of nearly 100 days, yet some of my competitors tell me that their debtors days outstanding are a lot less. And I've examined a couple of those and I knew the business that was a lot less. And the business that was a lot less religiously went through and understood what the contractual requirements were. And they were dealing mainly with mining companies. And mining companies have got very strict cutoff dates for all of the tax invoice and anything else that they require, weighbridge certificates or whatever, to be submitted to them. If it's not submitted in time, I think you know what happens. It just gets put into a too hard basket. And it will be at least 30 days later. And then sometimes will be longer than that before that invoice gets paid. And that's what blows out debtors days outstanding. And I think after 3.5 years of a lot of re-examination of what's going on with debtors, with the Prime Minister telling government departments to pay things quicker, with the Prime Minister pleading to big business to pay small business quicker, I think it's time we turn that gaze back onto what's happening within the SME businesses themselves. Have they got proper systems? Are they conscious of these deadline dates and requirements to supply some additional information to people? I think that's a significant problem that we've all overlooked. So that's the application for a credit account. So we got sole traders covered, we got companies, and companies, we want to know who the directors are, and we want to make sure we're going to get their personal guarantee signed. So these forms should be available at the sales department, because when they're negotiating with someone to open an account, they should be able to say, and we require this form to be submitted. And as you're a company, here's some directors guarantee forms. We'll email it all to you, and please get them completed and returned to us as soon as possible. Sometimes, of course, there will be a necessity to decline someone who's asked if they can have an account. So our system includes a letter to decline, because the person that made this application might well be a customer or a potential customer or someone in the community that people take notice of. They might go on social media. So I think your client should be as courteously as possible, indicating to them that they're not able to oblige them by giving them a credit account in the business. Do it as nicely as possible. Not just ignore them, not just send some phone message back, but do it properly, do it in a business-like manner. But let's now look at the situation if we've got a new customer. I don't think enough businesses are aware of the great marketing opportunity there is whenever there's a new customer. We should be sending them new customer letters. Welcome. Thanks for joining us. We hope that you enjoy this journey with us. And it's an opportunity, and this is what this letter has attached to it, to attach the terms of trade and the retention of title agreements that are very important for confirming what the terms are, but also for having the material that's very necessary if your client wants to register this new customer on the Personal Property Securities Register. So this is the form. It's also the opportunity to introduce who the sales team are, to talk about any promotion your client has, to talk about a regular video session that they conduct, which might be hints on how to use their products or discussions on new products. It's a sales marketing opportunity. Your client should be doing it. But I notice a lot of businesses don't do it. It's also an opportunity to confirm the credit limit for this customer and the terms of payment. And there's nothing wrong with saying to a new customer, you're going to pay us in 7 days or 14 days. And after 6 months, we'll review that. And if you have traded appropriately, we'll then extend you out to 30 days. Go and try and get some accounts with some of the big multinational companies and see what terms will be given to you or your customers. So that's the welcome to new customer letter that you can utilize. Another area that I think a lot of businesses miss out on a great opportunity is the necessity to inform the marketing and sales team that you have a new customer, because you need to reflect on how long this process might have taken. It might have been 2 or 3 weeks ago that this journey started. Someone approached a salesman and said, I'd like to open an account. So the salesman or the office sent the forms to the customer to complete, and they finally got round to completing them and sending them. They've then been assessed within the office, and management's agreed to open a credit account for this new customer. The sales department's probably forgotten all about it. But now an internal advice turns up on their screen. They can see that Bill Bloggs and co, who they can now remember they spoke to 3.5 weeks ago, has now been approved as a customer. They can now sell to them. Wow. The prompt they're getting is get on the phone, talk to them, send them an email, do a Zoom meeting with them, whatever, to start the ball rolling, to start to make some sales. So all the details are shown. And we tell them in this form what the monthly credit limit is and what the terms of trade are, so they can re-emphasize that when they're talking to this new customer. And who's the contact person for payment inquiries? So that's the reason for that form being included. I'm just picking what I think are the more important forms. I'm going to show you the full manual that we've developed shortly. The next area I want to go to is the Personal Property Securities Register. I don't like this legislation. I think it's some of the worst legislation we've ever had. And I've had to very diplomatically inform various business people over the last nearly 10 years that this legislation was passed by the Parliament. I don't know how, but it was, and that it is now the law. And if you really want to protect your business assets, you need to give consideration to registering various people and customers on the PPSR. The people you register might be people that you're storing assets with, whether it's stock or machinery or fixtures and fittings or whatever. And the debtors are people who owe you money. Because if they have an insolvency type event and a liquidator, receiver, or bankruptcy trustee are appointed to those customers or people that are holding your client's assets, your client can lose those assets. And over $440 million on my calculations has been lost by Australian businesses because of ignorance of this legislation. And when you consider that the biggest single loss was made by a subsidiary of one of the top 100 corporate groups in the world, $62 million they lost on a Western Australian mining site because they did not register an asset that they had placed onto someone else's property, and that property owner or lessee had a liquidator appointed. I think highlights the real risk that our SME clients are facing. And at the very least, they need to be aware that this legislation exists. I would not like to be any of you that are sitting at your desk tomorrow morning and someone walks in and tells you that they've just lost $250,000 value of an asset or of a debtor's amount because they knew nothing about this Personal Property Securities Register. I would really urge you to have a good look at it. And within ESS BizTools, we have a complete product package on the Personal Property Securities Register. So this form here, BAS 1680, summarizes some of the key areas to do with debtors transactions to consider. And it highlights that Ramalpa clauses are no longer effective. I don't know if they ever were, but they're definitely not now. You need to go through a process, or your client does, of registering people who they believe could cause them financial pain if they were unable to pay them or an asset that they held was lost. But we're talking about debtors today. So we're looking at issues where a debtor doesn't pay, or your client receives a claim from a liquidator relating to a preferential payment claim. And there's been quite a number of those, I'm told, by liquidators, that some people, and a lot of the problems here have been with tradie type businesses. They're getting paid progressively. Someone gets behind, they ring them up, they go and shake the door and they get paid. And then a liquidator claims that they got paid more than on a percentage basis what the other creditors of the business got paid, and therefore look to recover a preferential payment. Incidentally, if that happens, an advice I got from a liquidator on one of these sessions about 2 years ago was always dispute the amount and make them prove in front of a judge that it was a preferential payment. They can't claim back every payment unless no one else got paid for that 6 months period. Make them prove that in fact it was a preferential payment, because there's been some allegations that some liquidators and receivers and trustees in bankruptcies go out with a blanket claim on all payments. And we need to make sure that's not happening to our clients. So one way of protecting your customer is if they have, or your client, if they have registered their customer on the PPSR, I'm told that there's virtually no way the liquidator can recover any money on so-called preferential payments. So there's a fair bit of material there which gives you linkages and explains what's happening with debtors and the PPSR. And here's our best practice hint, is that make sure that you've registered those people. Okay, so I want to move on. You obviously can read all this if you become our subscriber. We hope you do. I'm now going to go to the Debtors System Staff Training. This is a form which guides you through with, first of all, you guiding your team so that they understand, but then to work through with the client's team. Do they understand all this? They understand why we're doing all this, to get a better system. Now, some of this you may edit out, but I'd suggest you have a good look at it and really give consideration to it. Some might be there to cover a very obscure case, but I think it's better to have it in there, because the aim should be of trying to get debtors days outstanding as close as possible to 30 days. I had a situation, I was running a seminar and in a mining area in Queensland, and someone asked me, what should the debtors days outstanding be? I said 30. I said, what's yours? She said, I don't know. I said, oh, hasn't your accountant ever talked to you about it? The answer was no. I said, well, what's your sales? And the sales were 3.5 million. What's the debtors balance? And it was a very high figure. And I did grab my calculator and did a quick calculator. It was 102 days. Now, I've done some work with that firm since, and it's now down to about 68. It's a vast improvement on 102. So you may have to do the same things with your clients. So this is a training form that's to make sure that first of all, whoever in your team's working with your client understands the system, and then they can go through and mentor or coach the responsible person or persons in your client's organization. And some of this is going to relate to the sales and marketing people, as well as the person that's got the direct responsibility. And now, last but not least, I want to bring up for you the Debtors Systems Manual. Now, this is the manual that you would be preparing. There's some notes there for you, which you can take off before you send this out to your clients. You would prepared by, for, and the client's name and the date. And actually, we're suggesting that once you've prepared this, you would then have an annual review on debtors to see if everything's working okay, and then update. That would probably be only 2, maybe 3 hours work. And every time the person in charge of debtors changes, I've noticed it's a job that gets changed pretty quick. You put in a prompt to the client to let you know, so you can go back in and retrain the next person, so that we work very hard at trying to reduce this debtors days outstanding, this immense investment in debtors. So we're going to consider a lot of things here, and you've seen a fair bit of them now in those overall forms. This is now a manual, which is going to guide the person who's got this responsibility, and perhaps some others in the organization. Obviously, the office manager should have a copy of this in their files, on their desk preferably, and the overall manager. And I think the sales manager should have it also, so that he understands what the treatment is of people who are trying to get credit. And one of the key things I think all of our clients need to be aware of is that in this haste, enthusiasm to get new clients, we're not getting someone else's problems, or they're not getting someone else's problems. And one way to sort that out is to have a process, to have a system. And hopefully this is going to decrease that debtors days outstanding, so that we never ever see the longest debtors days outstanding awarded to Australia. We'd all much prefer to win those wonderful gold medals that were won last week at the Olympics, wouldn't we? And the week before. No, can't forget the swimmers, can we? They were outstanding. There's notes, provision for notes on the right-hand side, where the person who's got this responsibility can make some notes as they're being trained. And what I said before is you can edit this template to make it really resonate with your client's business and what they call things. I'll never forget when I was a young auditor, I wandered around the office, I think for 3 hours one afternoon, looking for the cash receipts book, because that's what it said in the audit manual that I was working from. And I was a young graduate. I had no one else there with me. I'd been sent down to start this job. And this was a multi-national corporation. We're doing the audit on in a regional office. And no one knew where the cash receipts book was. Didn't know what I was talking about. Go back and look at the manual. And then a young lady came up to me about 10 to 5 and said, "Oh, excuse me, you're not looking for the green book, are you?" I said, "The green book?" She said, "Yeah, we got color codes for some of our files. And I heard someone talking about it, and it's a summary of payments and all that." And I thought, that's probably the green book. This is going back pre-computer days, back in the counting machine era, I must admit. And that's what I was looking for. But the audit manual didn't say the green book. So if you want to personalize this template to include green books and red books or whatever else, if that better explains what is happening in your client's business, please do so, because I think it'll make it a lot easier for them. We don't want someone throwing it away, which I was tempted to do that afternoon after nearly 3 hours looking for this document. I'm thinking, geez, my productivity is not, I can't charge this, can I? All that was going through my mind. So have a good look at it. And if some of these terminologies need to be changed, change it. So we're giving a bit of an example here of what's going on. We've got a director's guarantee document. We talk about why cash flow management's important. And we link to those forms that I've shown you, about 8 of them. There's more than that, but I've shown you them as a quick look. And we go through and look at setting up an effective debtors management system, starting at that credit application form, the director's guarantee form, the welcome letter. And why do we need a credit application form? Well, we're explaining that there. And they should be following up the trade references and looking at the amount of credit applied for and putting it through to management. The director's guarantee forms are very important. And we're telling them why. And requesting that they file them appropriately. These are not a file you can throw out in 3 years or on some taxation type cycle. You want to keep those forever. Declining a credit application letter. Internal advice of new customer, important. Get the sales department motivated, because we need to make sales. Some discussion about the personal property securities register. I reckon you'd be lucky to get 1 out of 1,000 people sitting down to look after debtors really understand what this personal property securities register is all about. Well, this is my attempt to give them some information without going overboard on it, so they understand why there's people looking at it. New customer due diligence. Approving a prospective customer. Now, I don't think it's the person who's doing all this work that's going to be the final approver, but he or she needs to put it into a file that goes to presumably the manager who approves it. And then the process can start. The welcome to new customer letter goes, the advice to the sales department goes. And then we establish some customer records. Be diligent on transactions. I found this quote in the old BRW magazine some years ago, which I kept. The impact of change of debt collection practices cannot be understated. It is twofold. One is the sales team who have the most contact with the customers and must be involved in making sure accounts are settled. If the money doesn't get paid, the business has got no money to be paying wages or bonuses or anything else, have they? The second is to raise the profile of the debt collection team internally. They're important. In fact, I would say they're very important, so that they can get senior salespeople on the phone to remind customers about bills. A sale's not completed until it's paid for, in my opinion. When I was chief financial officer of a listed public company, I kept on saying that to our salespeople. Until you get paid, don't go thinking that you're off the hook. Anyone can sell. I had a few interesting encounters with some of our salespeople, but I used to say to them, anyone can sell. The secret is making sure you get paid. This takes a change of mindset. The lesson is, if you want good debt collection, then you have to have good debt collectors. And I think you have to have good systems. And hopefully this is helping you. So that's the system. It goes on with various forms attached. And we also talk about the calculation of debtors days outstanding, proactive management, prompts or faxes going out to people a couple of days before the due date for payment of an invoice. And one thing I think I've omitted to mention today is, please make sure your clients are putting the due date for payment on an invoice when it goes, and also make sure that the invoices are emailed to the customers, and also that they get, if they're still issuing statements, they get them out within 2 days of the end of a month, not 22 days. That's another real contributor, I think, to debtors days outstanding being so high. A lot of our SMEs still issue debtor statements, and that's all right if they want to do it, but they take a long time to get them out. And a lot of their customers sit back and wait until those debtor statements are received before they're going to think about making payment. So the secret, I think, is if they're going to issue debtor statements, get them out within 48 hours of the end of a month. Otherwise, they run the real risk that they go into the next payment cycle. And that immediately adds another 30 days to the debtors days outstanding figure. So that's the overview of what's included. I'm just still flicking through this document. It's about 40 pages, including the addendums, but it gives you a document that you can insert, you can edit if you wish to customize to suit your particular client's requirements. They may already have some of this in place. We'll do some editing. It's a system that you can then sell this package to your client and obviously charge them for the time that you have worked on its implementation, the review of their current system. And please monitor what the debtors days outstanding and the amount of money invested in debtors when you started this process, and then monitor what it is after 3 months, 6 months, 9 months, 12 months, and so on. And make sure your client sees that, because if you've done your job properly, it's going to be coming down, and be calculating for the client the cash flow improvement that they would then have seen. They might have spent it on something else, but they would have seen it come through their bank account position. That's the important message. And it's one of the jobs that in introducing business advisory services to your clients, I think you can get a quick payback for your client. You can get those debtors days down quite quickly so that your client can see the benefit. And a lot of it is just some good housekeeping and business practices being introduced. So I hope that helps you in this overall deliberation. I'm going to go back to the PowerPoint slides. I can find them. So I hope that you're able to have a better understanding of the overall system that we have in operation to assist you in having a far better understanding of how all these systems operate and how you can bring this to your client's attention. So thank you very much for being with us. We have a special price at present for our packages. The starter package, which includes the debtor system I've just shown you, is available for a heavily discounted price of 50% discount for $999. That special is available until the 6th of September. If you wish to subscribe to that package, please go to our website, www.essbiztools.com.au. We also have a reduction on our total package, which we call our advanced or gold package. That's currently available for $3,250 instead of the normal $6,500. And you can obtain that by going to www.essbiztools.com.au. The next webinar in this session is being held next week, where we're going to be looking at characteristics of a well-run business. We've got 20 characteristics which we'll take you through, and that's part of the seminars and webinars which we have developed in ESS BizTools. In the advanced package, there are 36. In the starter package, there are 12 that you can utilize if you're a subscriber to better communicate with your clients. So that's on next week on the Tuesday, the 17th of August at 12 noon AEST. And on next Friday, the 20th of August, we have a very good webinar on predictive accounting, where we're looking at budgets, cash flows, and projected balance sheets. From America, we have the marketing director of Plan Guru, Trip Graham, joining us for this webinar. And I'm going to be joined in Australia by Paul Barnaby, a fellow of the Institute of Chartered Accountants and the Australasian representative for Plan Guru. And Paul's also the managing director of Beyond Accounting Technologies, which is a business he's developed, which concentrates on everything to do with predictive accounting. This is not history type work. It's looking at the future. What's going to happen in the finances? So what's the business plan say? What's the financial interpretation of that into budgets, cash flow forecasts, and projected balance sheets? That's on Friday, the 20th of August at 12 noon AEST. Thank you for being with us today. If you do have any questions out of what we have discussed in this presentation, please send me an email, peter@essbiztools.com.au. Stay safe, and I look forward to talking to you next week or at some other time when you want an update on what's available within ESS BizTools. Have a great day. Goodbye.